Hi Financial Hub traders, welcome again to our channel here and the 20th episode of our market breakdown. So today is the 20th episode, marking a beautiful milestone we've covered, meaning we've covered more than 20 weeks of free analysis on our YouTube channel, and we thank you all viewers who have been following us, watching our analysis and giving us reviews and critics. We applaud you people and we thank you very much for also helping us reach that 500 subscription mark on our YouTube channel. We thank you for following us. There's much more coming, much more exciting videos. Our course is almost up and running, and we have a beautiful thing coming before we launch our course that we'll be sharing with you guys hopefully next week or the week after that. It's been a beautiful first quarter, it's going to be a beautiful second quarter, and that's how we're going to end the year strong, profitable with those mighty pips. So apart from that, today I'm sadly alone. Ken is out and about doing a few errands and a few meetings for Financial Hub. Dominic DeCoco is not with us today. He's taking care of our pens and pencils. So we'll see him next week, but he's still taking care of that GA trade that he got a beautiful buy position last week. Apart from that, today I'll cover a few pairs. I'll cover my normal pairs. I'll take a few of Ken's pairs. Maybe I won't cover that much. I don't want to confuse you guys with Ken's analysis from last week. So I'll just do the few that I can, and we'll have a good time and enjoy this video. So apart from that, I won't talk much. The markets are waiting for us, so let's get right into that. So just to add on to that, as a bonus at the end of this video, I'll add Dominic DeCoco playing for us some beautiful music that we caught him, we recorded him last week playing, very beautiful, entertaining. So just wait on to that at the end of this video, after what's major and what's main on this video, our analysis, and a little bit of entertainment from a little bit of jazz from Dominic DeCoco. So see you at the end of the video. Yeah guys, so today I'll just do a short cover on gold, just to cover what we covered last week. So looking at my analysis over here, or what we had as a community last week, we've been within this channel that we've been following for some time now. That beautiful ABC came into precision, just what we're talking about. We, instead of hitting our target at 1265 to the T, we ended up touching our Fibonacci level 127.2 around here at 1266.4.5, around there, before we had this beautiful move to the upside after forming this pin bar formation. And that was a beautiful another buy option. So just to do a cover of what's happening at the moment, I can't really call for bulls at the moment. I can't say we are actually going to the upside. That's a little bit hard to tell at the moment, but following market structure, what I keep talking about, we don't do what we want, we do what the market is telling us. So following the market structure, looking at this, we're being capped at the moment by 1285. This level, we've talked about it multiple times. It acted as a resistance, it acted as a support. Right now it's acting as a resistance, and this is our daily time frame. So looking at our previous time frame, today's Tuesday, so on Friday we had this beautiful bull momentum to the upside. We kind of went up all the way to around 1288 there, came back below, and yesterday we saw the market drop a little bit further down to get our support at this level, which was capped by this liquidity level, if I'm able to draw it. So if you look at that line being capped, that spike 1, 2, 3, this was a beautiful support region, and today we haven't seen any spike below that level. As you can see, we've been having that beautiful Marubozu sort of candlestick, depending on how we'll close, but it's been a bullish day all day today. So what can I say? Well, where are we heading? So if we go down to the 4-hour chart, just to look at what has been happening, we've been trending within this sort of trend line, counter trend line at the moment. So as I said down here, after hitting our target at 127.2, we've been having this beautiful bullish momentum. So what we're likely to see is that we might just have that sort of ABC move to around this region. So we're waiting to see maybe market come all the way to 1295, around here 1294.5, 1295 region, and see how we'll behave around this region, being capped by this downward, very strong downward channel. I mean downward trend line, yeah, which is still the channel that we have on the daily time frame, but this mainly this trend line. So we're waiting to see if the market will come to this region, if we'll be able to break where A last topped around 1288 and see that beautiful move to the upside before we can know if the market will go higher or will come back down after this basic ABC formation. If not, and the market is being capped by this level, which I don't really see the market being capped here for long. But remember, we have that region, we never forget our regions, that 1285 region. If we're not able to break above it, we'll go back below, maybe head back to 1265. But for now, we're getting that beautiful bull momentum to the upside. If we break below this trend line, this counter trend line, we'll go all the way to the downside. So this is not a really high strong setup that I have at the moment. Maybe my others are better, like the Aussie dollar, but this is it's better we sit down and watch instead of forcing the market to go all the way to 1295 or trying to push it to the downside. We are not market makers, we are market participants, and in trading, the trader is the weakest link. So you don't have any say in this market. So just follow market structure. We'll be following our candlestick formation, especially this one, how we close. If we close at sort of like a pin bar formation over here, maybe we'll be having that pump to the upside. We should be closing in the next 15 minutes. So we're yet to see that, and we'll know where the market will be heading. So I don't have much to say on gold. It's not a high setup I have for this week. So we'll just go straight on to the Aussie dollar. So yeah guys, this is the Aussie dollar, which we've been having beautiful trades for the past few weeks. It's been really respecting how we've been analyzing, or rather we've been respecting how market structure has been forming rather than the market respecting us. That's next to impossible. So we've been in this channel that we've covered for days. We've been in this channel since June last year. So we've been having that beautiful downward momentum, and right now what we're seeing, as you can see at this level where we're being capped by that red region over here, you can see we came and tapped it once, came back up, had that beautiful lower high, came and had a lower low over here. We spiked all the way down to the downside, which we don't really count as a bottom really, but market came back, had another lower high. So this is basically what is it called, a descending triangle. So we had that being capped here the second time, came back up, were capped again the third time I mean, and now we're being capped that fourth time. And mainly if we count the formations on the descending triangle, how many times we're being supported or rejected at a certain level, we are sooner or later just about to break that level. So watching this market closely, last week we had a beautiful drop to the downside. This is the daily chart. So we had that 1, 2, 3, 4, 5 days of beautiful downward momentum. Then we came down and had that dodgy formation just below our resistance level, 0.7025 or 0.7050, depending on how your level is. I prefer the 7025 level. So we had that dodgy formation around here. Market came back up, so now we're sort of finding resistance, and this is a really major level of where market is finding resistance. So if I'm able to zoom this, as you can see, I've drawn sort of a temporal resistance level at 0.7060, major support level for me. So we can see we came, when we had that beautiful bull run after that drop last week, we came and touched sort of that resistance level. Yesterday, yet again, market was a bit slow. We didn't have that much movement, so we came again and touched that level. Today, we've seen the market spike above that level, as you're seeing over here, and now we're sort of fighting between bulls and bears. As you can see, this is a doji, so we came all the way down back to 0.7035 level, but market seems not to be getting that sort of push to either side. So if you go down to our 4-hour chart and just see what's been going on, so as you can see, I had that short to the downside, but let me just get rid of it right now. So what we're seeing now, market is seeming not to be breaking below 0.705 level after it came all the way up. So what we need to keep in mind following market structure is this line that we've always had for a long time, which last week when I gave my analysis was actually coming to touch this level around here, was my target at 0.7070. That was a beautiful sell that we got all the way from up here. So following this trend line that was broken, now what we're seeing, basic, if you're able to see this, market breaks to the downside. Now we're having that retest, which was a beautiful touch over here. Look at that. So it's a beautiful setup to go to the downside if we get that good momentum, depending on how market closes. As you can see, we're fighting over here. This is a major level, and many people will get confused at this level. So best to watch if you're a new trader, you're still basic to trading. Just look at confirmations, maybe get a good sell around where we are right now. That's what I'm looking towards. But remember, we're being capped by that support level, and we're still in that descending triangle. But basically, the bears seem to be in control of the market over here. You see, the bulls are not getting that push to the upside. So this is a basic formation. We're watching candlestick formation, that retest of broken trend line. If we're able to come back and close below 0.705 level, we are yet to go to the downside, targeting areas of around 0.6950 down there. So that's about 100 pips if the market gets that beautiful momentum. But be wary if the market comes back above this trend line. If we come above this trend line, we're sort of in a very dangerous territory. So depending on how you analyze, if you're taking that short position, best to put your stops above this trend line, this previous high that has been formed around here, maybe at 0.780 and above. But apart from that, if market comes back above that level, we're in dangerous territory. So that's basically what I have on this pair. And maybe you can check out GA. We've never done GA, so let's look at that GA that Dominic DeCoco got a good trade the other week. Yeah guys, so this is GBP AUD. So what's been happening with this pair? So just to show previous analysis is that we had that beautiful channel to the upside. Market respected high, low, high, low, high. Market was capped by that level. Now we formed another channel to the downside. So this is a daily time frame. So just to see what has been going on, we had a beautiful buy from these levels down here, which was a beautiful trade. Market had been coming all the way down. Channel capped it down here. So it was, the candlestick formation also showed signs of beautiful upward momentum. As you can see, what we're forming here, it's really, in terms of probability, because we deal with probabilities, not certainties. We're never certain of where the market is going. So we have probabilities together with risk management. So we mix that together to know, to get a beautiful entry and trade. So we got a beautiful trade over here, which market came all the way up, right from the bottom boundary of our channel all the way up to the top boundary of our channel. So what is going on at the moment? So we had this beautiful bullish candlestick close last week, which was showing very strong bullish momentum to the upside. So if we look at it closely, we have this level that I've written around here. Where is that? Yeah, critical short level, liquidity level. So if you go back and just look at this level, this is the level 1.8450. So from back here, as you can see, it's also a temporary one. Market has been capped once, twice, thrice, fourth time. We broke above, came below. As you can see, this spike over here, we came back and retested it, went all the way down. Market came here, spiked above, closed below, again over here, and now we came and touched that level, had a beautiful sell position all the way down to that level where we were earlier on today morning and yesterday. And now with the bullish momentum that's coming, if we go down to the 4-hour chart, just look at it better. Here we go. So looking at that, look, here's that channel that we had all the way from up there. It was beautifully respected all the way down here. So what we had basically, especially from last week's entry, which we didn't post but we had, is that we came and had that bottom, came up, had that consolidation, so impulse correction, then that beautiful impulse to the upside. So we're sort of having that correction phase at the moment over here. Drew another channel, market has respected our trend line, and also this temporary support region that you're seeing over here, market touched it to the T and shot all the way up in line with our trend line, in line with our channel that we had, that downward short-term channel. Market seems to be pushing higher. Now, as you can see, we've already broken this channel. So basically what I can say on GA is that we might see a move to the upside and spike, maybe not 1.8500 level. If we're able to break above this channel, it will be just a basic impulse correction and another impulse to the upside. So I actually had a short analysis that we might head further lower, which is still an analysis I have. It's not yet been nullified. Until a few things are broken over here and nullified is when we'll officially say that we're still up for an uptrend. But as long as we're respecting this channel and all, we're yet to see maybe a move to the upside. So following market structure, we'll be seeing how market will close over here where we are. As you can see, we're not really breaking above the trend line, that downward trend line. So depending on how we go, we'll be watching that. So I'm still 50-50 on this, to be honest. I won't lie to you that we're going up or going down. I'm not really certain, but I'm basically watching for this. This would be a very beautiful trade, either to the upside or to the downside. So if you go to the upside, I'm targeting 1.850 level according to the analysis over here, or maybe even a spike higher. We might have that spike to that level and close back below at 1.845 region. But if the market is capped by this level and we shoot all the way down, if we're capped by the level 1.840, then we're targeting all the way down at 1.800 level, all the way down here. If the market following the Fibonacci target level. So that's what we'll have on this beautiful trade. But at the moment, we might have that short-term move to the upside, together if Aussie dollar is able to break down to the lower side. What we need to keep in mind with this pair is the Bank of England interest rates later on this week. I think it's on Thursday, if I'm not wrong. So we better watch for that. It might be a catalyst to the move that we're expecting on this level. So watch closely. Don't trade the market news based on what the news says. Everything is already factored here. Don't try and compete with the people who are trading with the news. They have much more information than you can have in your house. You don't have that much information, so better try and focus on your analysis technically as compared to trading fundamentals and all that. But depending on what type of trader you are, I'm not telling you this is the best way, that is the best way. Follow your analysis. So basically that's what we have on GA, and maybe we can do one more pair, which is Euro USD. Yeah guys, so this is Euro USD, my analysis. I hope it doesn't confuse you because you've been following Ken's analysis, but this is basically what I have. It was a beautiful trade that we had all the way down. As you can see, we had this sort of a counter trend. We broke below it, had that short-term correction, then market dropped all the way to a Fibonacci level 127.2 target level. So that the red region I have over here is what we highlighted, that we might have market being capped by that level, and we've actually been capped by that level. And ever since that day, we've been having bullish candlesticks for the past 3 days. So where's the market going? If you go down to the 4-hour chart, maybe we can do that to get a clear analysis. So this is the 4-hour chart, and we've recently broken this trend line to the downside, and the market seems to be getting that momentum to the upside, and we might continue this momentum maybe to this level around 1.1215 level, and see if we're actually in a bullish momentum. If we're able to break that 1.1230 level, we'll start seeing that movement to the upside and maybe target again our downward trend line and maybe even break up above it. So what's really giving me an insight on this pair, if we go back to the daily time frame, because there's something important you need to know, in terms of correlation. As you can see, this we've been capped by this level over here, the Fibonacci level, support level. If you go to our dollar index, that's where we might get exactly what is happening with this pair. So yeah guys, this is the dollar index. So following what happened over here, just basic analysis, we had a beautiful ABC. We're also in an ascending triangle. That's how we were able to break up above this level, because the market was forming that ascending triangle, which was beautifully broken by this last week when we had that beautiful bullish momentum. So that's basic ABC. So what we're seeing now is that market is coming back down, maybe to retest this trend line in line with our support level 97.5. So what can happen maybe is market can come and break, maybe come and touch this level 127.2. If we're able to be capped by that level, as you can see, the market is having a strong downward momentum. But long term, I can say we are up for this dollar index falling all the way down, will fall. So if we're able to respect, so we sort of have a channel over here, and I have this black trend upper trend line that I've drawn over here, which is in line with our 27.2 level. So if the market is able to come around this level, around 98.5, 99 region, market after that might fall all the way down. So really watch this pair closely. Even where we are, where market is, we might get that momentum to the downside and break that level and fall all the way down. That break to the upside is not, I'm not really in favor of it at the moment. I don't think we'll be going all the way up. A lot has been happening on the ECB side, so the euro also has been really losing across the board, so it's also important to watch out for that. But at this time, we're also waiting for interest rates from US later on tomorrow, and also on Friday we have NFP. So those are important news to watch closely. So market might come back down around this level, maybe consolidate for a few. Tomorrow we'll see some spikes, definitely, if when the interest rates are released, then wait for that NFP release. So a lot of movement on this pair will be seen maybe next week, because we might also have ECB interest rates. After that, maybe we might have now a lot of movement from this pair, and we'll get that direction to where we're going. So basically that's what I have. Maybe we'll have, so basically in conclusion, correction maybe to the upside, maybe a bit more impulse wave to the upside before we get that major fall to the downside. So the most I can call for this pair is maybe 99.5 if we go to the upside before we get that downward fall. But that's basically what I have. It's more important to follow Ken's analysis in the dollar index and Euro USD to know exactly where this pair might be going. So that's what I have, guys. I hope you've enjoyed the video. Now we can have a little bit of entertainment from Dominic DeCoco. I hope you enjoyed that entertainment, and we'll be sure to catch up with you guys. There's a lot of more content coming, a lot of exciting information coming in the next few weeks. The month of May is going to be a beautiful month. You're going to catch a lot of pips. And just to remind you guys, we're not here to sell signals. We're here to help you understand how to analyze the markets better. So that's basically what I have for you guys, and I'll see you guys next week. Well, man, that's Dominic DeCoco. See you guys next week.